What the heck?
All right, so take me over to the trap if you don't mind, because I'm a little bit better at private equity than I am at golf. Which, if any of our investors are watching this, I'm sure they're probably happy to hear that. We are on July 4th vacation, by the way.
This is true.
I had a good call Sunday night, period, and we're discussing Monday, period.
You talk to your phone like that? I should probably start doing that. Go in. Dude, that was a great shot.
Don't worry, I'll screw it up.
Get over that tree.
Oh, good. Hide behind the tree. Oh. I was trying to punch it. That was the whole point.
Well, my name is Alex Western. I'm the founder and managing director of Terminus Capital Partners, or TCP. What we do is we buy and build business software companies and business AI companies. We're trying to find the slow and steady, wins the race, boring is beautiful, like what's the kind of software people can't live without that makes business and makes the world go round, and that's what we try to do.
So software, you started your firm, right, in
2017, I was working at a hedge fund and started a little one-man shop, independent sponsor, and we started doing deals with a family office, and then we did a pass-the-hat independent sponsor deal, and then we got a pledge fund with another family office, and then 9 platforms later, we just closed on dedicated blind pool Fund 1.
What'd you end up closing at, your fund?
250. Yeah, that was the hard cap. 215 was the target. We put hard caps on funds 1, 2, and 3. That's pretty weird because everyone in this business is like, hey, go big, go home. Let's grow as much as we can. Let's get as big as we can.
Right.
And, our whole thing is we know exactly what we do, and what's that, the principle where you get promoted to your level of incompetence, the Peter principle or whatever. We don't want to do that. So since we know exactly what we're doing, let's grow deliberately and modestly. So
yeah.
250, 375, 500. That's the plan for the next 3 funds.
Were you doing technology or SaaS focused deals at your hedge fund?
I split my time between healthcare and software. So it was kind of a gateway drug because I just kept gravitating to software because I thought they were the best business models. I thought it was a sector that had interesting tailwind. It was nice because I was probably 40% focused on it, but
right.
I got to see other sectors, which really highlighted why, to me, software was so special.
Mm-hmm.
And when I got started, I was a complete generalist at one of those giant private equity firms, and I did 2 software deals there. And again, I was compared to these 30% gross margin widget manufacturers or the healthcare deal, I just gravitated towards it.
Right. Yeah. Was that because of the style of the return, or just the actual operations were interesting, or just deal flow was there?
It's honestly a bit I think they're great businesses, subscription revenue models, very high returns on capital, asset light. But it actually is what you said. When I started working on those deals, I liked the people. I liked the people I was working with and the software engineers, and I'm wonky and nerdy, and so I think that way too. And so I think like an engineer, and so you do business with people you like. You know what I'm saying? You find your home.
How was fundraising?
Fundraising was a new challenge.
You hadn't done it before? I mean, you actually have.
I mean, so honestly, it went really well. I mean, we were fast. We were up and down in less than 3 months from first close to final close. And so we're really excited about that. I think part of it is independent sponsor is so darn hard because the deal business is hard enough as it is. And if you have to ask the deal to hold still for a second while you put together a 30, 50, whatever it is.
Right,
Oh my God. So I think that kind of battle hardened me a little bit. But it's a tough market. I mean, there's perennially too many dollars chasing too few deals, so you need to be disciplined, you need to have a good sourcing engine, and you need to have a good story to tell, you need to have returns. And then you need to actually prove it out.
Right.
But yeah, no, fundraising was, I think COVID probably made it easier because people like to do the Zooms, they like to do diligence on you in person. So it actually made the process logistically a little bit easier.
Yeah, I think that's probably true in a lot of scenarios. Just you only fly to Philadelphia from Texas to meet each other. Let's do this on Zoom, and then we'll quickly know if we want to take this to actually meeting each other, or
Right.
if like it's not a good fit.
Right.
You know? Were a lot of the people y'all went to, had they invested in your deals previously?
Not a single one.
Really?
There were 3 that we had shown a lot of our deals historically, which I
Sure.
think just helped them get to know us and get comfortable.
Yeah.
But it's funny, so the investors in the fund, it's like 2/3 endowments and foundations, 20% funds of funds, and the rest are institutional wealth managers. None of them had been investors previously.
Sourcing.
So we have
Sourcing.
Yeah,
is
so
the
so
topic.
so two members of our investment team are pretty much full-time dedicated to origination. But I'd make the distinction, it's not like separate sourcing or separate BD. And every member of our investment team spends a disproportionate amount of time on sourcing. Everyone's got a different approach. This is not rocket science, but our approach is we want to have our own database, our own version of CapIQ or PitchBook or whatever. That's a good shot.
That was a great shot.
We want to have our own database, and we want to reach out to companies directly, not because you're going to have that perfect, completely proprietary relationship, but we reach out to the companies directly, and we maintain like literally a shopping list
Really?
of like 100 to 200 companies at any given point in time, where we're like, ooh, like if these were to come up for sale, like I would love to hop all over that.
Right. When you say database, though, is
Yeah.
it like fancy? You have like a because you're in the tech business. Like, is it a? I don't even know the word I'm looking for, but like, it's not an Excel.
It's
sheet.
not just it's not just an Excel spreadsheet or a CRM. Yeah.
Listen,
And I mean,
the
like
first time.
everyone's doing what they think is special stuff. We've got some web scrapers. We have some AI agents that are doing some
I see.
qualification and research for us. We have like lead scoring algorithms for us to help us kind of force rank and tweak the database. The whole idea is like, let's automate as much of the analytics or the grunt work as possible, so that way we as investment team members are spending our time on what matters, which is the face-to-face interaction.
Makes sense.
And actually trying to help these people business build.
Yeah. So like the first quarter of that exercise, you're trying to basically like automate and weed out opportunities. So then you're actually focusing on like what's important pieces.
We're doing the reach out, we're doing the emails, we're doing the calls, we're doing the brainstorming sessions, and then a lot of the stuff behind is pretty automated.
What are you seeing in the market? Or seeking? Yeah. So like, what are you looking
seeking?
for?
I have this thing. It sounds like a soundbite, but it's not. Like, we want to buy real software companies to solve real problems for real businesses in the real economy. And like, the reason I put it like that is the last company was research software for market research organizations.
The last one that you.
Last one we did was market research software for market research firms and ultra large enterprises and government organizations, academic institutions. Like, they need to conduct research.
Right.
Like, we are the platform that helps them do that. One before that, mutual fund accounting and settlement trade processing. Like, are mutual funds 2/3, 3/4 of the U.S. retirement industry? Yeah. And like, is the only way to be profitable as one of those fund companies to have a lower cost of capital given the fee compression? Yeah. So I mean, like, stuff like that just matters.
Right.
Before that, credit collection software to big banks. Get these kind of, we call them plumbing software.
Got it. Yeah.
Stuff
makes
that
a lot
just,
of sense.
it's not super sexy, but God, that makes sense. That's what we do.
A lot of these companies, is it like an internal process that you're carving out, or are they usually already is a company doing the service already?
So that's a really good point. Like, if you think about the clients of our portfolio companies, the client is typically either using our software company or, oh no, we have people that do this
built it
manually, internally, and we use Excel spreadsheets, and this is how we keep, It's those kind of boring business processes that we're automating to save them money. That's the biggest competition for our portfolio companies. If you look at, you flip through our investment decks, and we wouldn't say this, internally if it weren't true. The number one competition is usually doing nothing, internal Excel spreadsheets.
Yep. AI. You mentioned AI back into your last comment. That is obviously a very hot topic right now. Is that as applicable to some of the deals that you're looking at, since they're really like internal processes? I would expect there's still some level of expectation where people are like, can we automate some of this with AI? What does that even mean?
It's super applicable. So as a software investor, even people who weren't that smart or great at what they did could make a lot of money in software, because software is just such a great business model. I think now and in the future, you got to be a lot more careful and really good in terms of your business selection and your value add, because a lot of software is going to get disrupted by generic agentic AI that can perform a workflow.
Do it already, like kind of eliminate.
Why do I need this software to do that? Because there's this complicated workflow that it does, but now I'm just going to have the internal master agent that does, or my generic ERP or generic CRM software, I have an agent on top of that. It allows software companies that are super broad and horizontal and not that specific to get niche and specific.
Right.
If they put an AI layer on top.
Yeah.
So a lot of stuff that used to seem like it had a moat has less of a moat. We weave AI into the fabric of how every one of our portfolio companies does business.
Yeah.
Because if you don't, you're not future-proof.
Yeah.
Like the analogy I use all the time is like go back into the caveman days, and there's two groups of cavemen, all right? One group of cavemen invent the wheel.
Right.
And the second group of cavemen are looking at the first group of cavemen, and they're like, yeah, I don't know, like, it seems like hard for change management. I'm not sure the wheel works that well. Like, I would need to retool. And so
Right.
the second group of cavemen is like, yeah, I'm not going to adopt the wheel. Well, the first group of cavemen, like, they're our ancestors, and the second group of cavemen all died.
Right.
Like, that's how important AI is to software, and so we use it to hopefully pick up yardage. But you ignore it at your peril.
Yeah. So like jumping off from deal
Yeah, just like, all right,
sourcing.
That's like, hey, so if
Now you
if
got
get
something-
It, like, if you get it, like, why is it better in your hands versus,
Yeah.
versus anybody else's? Because
Yeah.
there's a bunch of people bidding on businesses.
Yeah.
Oh my gosh, pin seeker.
Good shot. So do you think about that in terms of like how you're having discussions with management teams, or internally actually, like how we're driving return?
No, we think about it much more internally. How do we actually add value? Like,
Right.
to use another software analogy, there's this, returns are getting closer to the metal. So it's not like, oh, I'm sourcing better, or like, oh, I made my money on the buy. Like, it's like, no, things are pretty efficient. So it's like, is it worth more to you? Can you do more with it?
Well, so what does that actually mean?
I mean, what we typically do with companies it boils down to only a few categories. Number one, we're usually helping hire, build out the management team, and even build out like middle management and even rank and file. So on average for a Terminus company, we're going to hire 15 people into the company. Not just like, oh yeah, a CFO, you need a new CTO that's world-class, sure. Someone who's like actually, an expert in Kubernetes, sure. Like, you need to build like go-to-market, but even like, yep, I need 4 QA guys, like rank and file, So building out a team, number one. Number two, building go-to-market. Because if you think about where we buy businesses like 10 to 20 million in revenues, first of all, respect, that's a real business.
Absolutely.
But you can get to that level like with the founder's reputation and a great product, and then you realize like, have we built a repeatable, scalable go-to-market? Usually the answer is no. And so a lot of management teams are like, that's what I really want help on. So hiring the SDRs, hiring account executives, building out processes to actually kind of wash, rinse, repeat,
Yeah.
so you can drive predictable revenue, and then usually fixing tech debt. So yeah, I mean, listen, we kind of evolved haphazardly. We had to, and so there's some tech debt here. I wish we could clean this up. Well, we do that. Like, modernize, clean up a tech stack, make it scalable, and then add-ons. Like, if you buy a company at 10 million in revenues, and on average we'll get it to 25, 30, it's not just because you like grounded out 1-2 million of bookings at a time. Like, usually you bought 2 or 3 companies that are kind of 5 to 7 million in their own right.
I see.
And the whole's greater than the sum of the parts.
I see.
It's kind of those 4 areas.
Yeah, I was going to ask about like add-on, versus organic. You're going into things with a strategy to go
50-50.
Yeah.
You
And you've
wanna do both.
identified a lot of the market before you've made your investment. Like, these are the ones we'd like to go after.
You map the market to understand competition, and you map the market to understand who you might want to partner with.
Yeah, that makes sense.
I always like incorporate a section on how would you get back into the industry, or how would you enter
Oh,
the
if I were going from
industry.
scratch?
Yeah, but it kind of applies to who you're recruiting as well, right?
Yeah.
Like, what's some advice you give to younger people that are wanting to end up in a private equity seat?
The advice is this. Like, as I reflect early on my career, I was very brand focused and prestige focused. Like, I want the big established institution because I think it sets me up for the next thing. What are my exit opportunities? All that stuff.
Right.
I was wrong. Like, I had several opportunities to join small growing firms that now are incredible and established. And I was like, gosh, I should have just, I heard there's some book about Google where it might have been Sheryl Sandberg, maybe it's a Facebook thing, I don't know. Anyway, it was like, hey, if someone's offering you a spot on a rocket ship, don't ask what seat, kind of thing.
Yeah.
That's what I wish I'd done. And so my advice to young people is like, if you can find like, oh, this is a newly established firm, it's growing, like you'd actually get FaceTime with the founder, like that's great experience. I wish I had taken one of those leaps earlier. I could have accelerated my career even more.
Yeah, I always feel like people say both are good, right? It just depends. But in the example you're giving, you wear more hats, so you actually end up doing a lot more that's way above your role probably, which ends up accelerating your career, right? Like doing pitches and talking to management teams, where like at a big shop, you're probably like third seat in the room.
People say like work at an institution until you're an institution. So I don't want to like overplay the advice I'm giving. I just will say that could be overdone for exactly the reason you just gave.
Yeah.
Other advice, especially in a world of AI and like, I mean, just pick your headline over the last few months that, oh wow, out of college unemployment is higher than it's ever been. The unemployment rate amongst 20 to 28 year olds is higher than the unemployment rate for 45 to 60 year old. Like all these statistics, which historically would have been completely upside down. Like don't nitpick. I remember in undergrad and business school how much we all obsessed about like, oh my God, I got to get the exact right job with the exact right firm.
Right.
We all changed jobs like 4 times.
Yeah.
The thing was just get the damn job, start working hard, make your boss's life easier, make them like you, they give you more. Just get the ball rolling.
100%.